All right, I'm going to treat that as the moment for us to get started here, since we're getting started a couple minutes late. I was really feeling John Prine in my heart this morning. So thank you all for being with me on that. I know a lot of you on this call probably are like, I'm not feeling pretty good. I'm confused about this B2B application, and hopefully we are here to answer some of those questions for you. So a couple things about Zoom. One, hi, I'm Casey Smith with Arts Alliance Illinois. I'm the director of programs. My pronouns are she, her. I will be your Zoom flight attendant today. There is a chat function. Feel free to say hi in the chat, but if you have any specific questions for us, and again, this is specifically focusing in on accounting and tax questions. So this is a very, very specific webinar focused in on a very impactful part of this application for the B2B Arts program. If you have any questions, you can put them in the Q&A box. You'll see if you add a question there, there'll be a little thumbs up button, a little like button, and you can click like on questions that you think are really important or that you have too, and that will help us to prioritize the questions so that we make sure we're answering the most important questions at the end of the webinar. With that, actually, I'm going to do a little bit of level setting here, just in terms of who we are. Most of you have probably been on our webinars before. Arts Alliance Illinois is a statewide advocacy organization. We are working as a community navigator on the B2B Arts program. That means we are not deciding eligibility, and we are not the ones that are actually administering the grant and making the awards. However, we are a very good and important source of information for you, because though we are contracted with DCEO, which is the Department of Commerce and Economic Opportunity, we work for y'all. So we are here to advocate on your behalf and to make sure that you get your questions answered. If we don't have the answer, we're your best bet to getting that answer from DCEO. And, you know, we're going to try and make sure that as many people are successful in putting in applications for this program as possible. So that's me. I'm here on the call. I'm going to do a little intro of my friend Jillian, who is also on here with us. Hey, Jillian.
Hey, Casey. Thanks so much. Hi, everybody. Thanks for joining us. I am Jillian Gora. I am with BDO USA. I'm not with either DCEO or the Arts Alliance Illinois, but I am assisting here. BDO is an accounting firm, and I work for a division of BDO that focuses exclusively on the nonprofit sector. We are financial and operational management consultants. And so I've been working with nonprofits now with BDO for a little over 4 years, and I am assisting and helping out with the financial piece, the tax forms. What is it that you need to supply? What if you don't understand which tax forms you need to supply, or how to treat potentially a change that you've gone through? So that's my role. I am so excited that we are also assisted by Kamari Karam, who is an accountant, and I'm going to toss it over to Kamari for a moment to say hello.
Hi, yes, my name is Kamari Kareem. Happy to be here. I am with Upscale Accounting Solutions, been with the company for 7 years, and I deal with the for-profit side of business for individuals and small businesses as well. And I'm here to assist with any questions or comments that may come up for the for-profit side.
Thank you so much, Kamari. And also Sasha Ongtenko, who is our help desk manager, is on here. She will be lurking in the chat and in this Q&A and answering some questions as they come in, and then handling the Q&A at the end of this presentation. So a couple quick things. I know that all of you already know this, but just to go through it really quickly, this is for the B2B Arts program. There are 5 eligible categories for that: venues, performing, presenting arts organizations, arts education, museums, and cultural heritage organizations. Nonprofits, for-profits, and sole proprietors are all eligible as long as you experienced a loss of at least $5,000 due to COVID, either in 2020 or 2021 as compared to 2019. Freelancers and individual artists, y'all know we've been really hammering on this. There are freelancers and individual artists who are going to be eligible for this who may not know it. If you have questions about that, please, please, please get into our help desk and we'll talk more about that towards the end of the webinar. And Sasha will drop a link in the chat, but it's a really important space for you to get one-on-one support for your application. Finally, this grant is not first come, first serve. We've been saying this over and over for the last 3 weeks. And everyone who is eligible will receive funding. So it's really important that you get in a correct and complete application and wait for the answers to your questions if you have a particularly thorny situation. Because again, if you put in that application on May 9th, you will be just as eligible as if you put in that application on April 10th. So, and that is an important thing. The application does close on May 10th. Do not rush. All right, with that, I'm going to hand it over to, if I can figure out how to stop sharing. There we go. I'm going to hand it over to Jillian to take over for the rest of this.
All right, thanks, Casey. Thanks, everybody. So yeah, so we're here today to talk about the financial pieces that you need to submit in order to apply for this grant. So I want to talk you through just some level setting here to begin with. Some of this Casey just shared with us. First of all, the grant amounts are between $5,000 and $250,000. They're based on a decline in revenue. And I really want to hit home with that because we are using every now and again words like losses. But I want to really just emphasize the fact that what DCEO is looking at is a decline in revenue. We are not looking at an operating surplus or deficit or a profit or a loss. We're not actually looking at expenses at all in this grant application. We're really just looking at revenues. And we see here that if you are a for-profit, that includes freelancers, sole proprietors, we're going to be looking at a decline in gross receipts. And I'm going to take you specifically through the line items in certain tax forms that DCEO is looking at in order to substantiate those declines. If you are a nonprofit, they will be looking at a decline in earned revenue, which they are defining as your program service revenue, right? Or a decline in your contributed revenue, or a decline in your total revenue. And they're going to be looking at which of those three buckets had the greatest decline, okay? Question here, if your business or organization has in the past received either a BIG, BIG, or a B2B grant, absolutely still apply. But instead of looking at the difference, the decline in revenue between 2019 and 2020, or a decline in revenue, excuse me, between 2019 and 2021, automatically going to look at that decline between 2019 and 2021 if you have previously received BIG or B2B grant funding. And then finally, we see here any applicants who launched their businesses in early 2020. So you don't have that 2019 comparative year. You are eligible to receive this funding, but only in the amount of $5,000. We do have a webinar recorded around eligibility, and please reach out to the Arts Alliance help desk if you have eligibility questions. So what are they looking at? How are we to substantiate these declines in revenue? You will need to supply your tax forms for 2019, 2020, and 2021. There may be some of you that do not have tax forms for 2019 because of what I just mentioned. We can talk to you offline separately about what you need to, how you need to move through the application there. But in general, everyone is going to have to give their tax filings, or if you're a nonprofit, your information return filings for these 3 years. You can see that sole proprietors are going to submit IRS Form 1040, and this is critical, inclusive of your Schedule Cs, because this is where they're going to substantiate your gross sales or receipts. If you are a partnership, you're going to be using IRS Form 1065. You do not need to include any K-1 schedules. If you are a corporation, it's going to be Form 1120. If you're an S Corp, you'll use 1120S. Finally, for nonprofits, you're going to be using either the full Form 990, the 990EZ, or if you file a postcard, we're going to talk about that as well. So important thing to also stress here, we want to use our fiscal year end for the year, the tax year that we are submitting. So if you are on a calendar year fiscal year, that's easy enough. We're looking at 2019, 2020, and 2021. If you have a fiscal year end that is not December 31, you want to use the year that your fiscal year end falls in. So my example here is a June 30 fiscal year end. You're going to take your June 30 fiscal of 2019, right? Your fiscal year 2019, and that's what you will submit for 2019 and so forth for 2020 and 2021. These are the line items specifically. Oops, sorry, everybody. Apologies. These are the line items specifically that DCEO is looking at to substantiate declines in revenue between our tax years. And I'm going to show you pictures of these. But we see Schedule C, we're looking at line 1. We see this here and so forth. That 1065, it's line 1A. Same for 1120 and the 1120S. In 990, we're looking at line G, and the 990EZ, it's line L. I'm going to show you each of these, but really, truly, these are our, for the most part, for the for-profit side, our gross receipts or sales, and for the nonprofit side, it's total revenue. Now, again, nonprofits, we're going to be looking at, DCEO will be looking at a decline in either earned revenue, contributed revenue, or total revenue, whichever is greatest. And so I've identified here the line items that DCEO will be reviewing for those 3 buckets. We've got total income again on line G, and then we'll look at in the summary section, part 1, lines 8 and 9 for contributed or earned income. So let's take a look at the forms and really see what this looks like. So I'm starting with a Schedule C. For you sole proprietors, you're going to have this form that goes along with your full 1040, Form 1040. Now on Schedule C, here we go, line 1, gross receipts or sales. This is the line item that you're going to need to go to because we'll see, I'm going to take you to the application. You're also going to need to input this data on your own. Now, something that I haven't said already is that another piece of data that DCEO is looking for is your NAICS code or your business activity code. For the most part, these can be found on all of these tax forms. So here on Schedule C, we see it up here, letter B, enter the code. So we're going to pull that code out and put it in our application as well. So that's our Schedule C. If you are a partnership and you're using Form 1065, we're using line 1A, gross receipts and sales. You can find that business activity code on the same page here, business code number, okay? 1120, the corporate return. Here we're using, again, gross receipts and sales, line 1A. Now on Form 1120, we're going to find that business activity code in a slightly different place. A little bit later down that form, we've got a Schedule K. Now, you may recall I said you do not have to include Schedule K1. That's a different form. But here, as just part of your normal 1120, we've got a Schedule K, and that has your business activity code number in it. So you can go there. If you are an S Corp, maybe you're all sensing a theme. Line 1A, right? Gross receipts and sales. This is what we're looking for in the for-profit, on the for-profit side. And we've got our business activity code here in the top summary part as well, letter B. Now the 990, I'm moving to you for-profits. I'm sorry, you nonprofits, excuse me. We are looking at letter G, line G, gross receipts. This is the first piece, right? That's total revenue. That's going to be that data that we're grabbing for total revenue. If you are a nonprofit, you are also going to put in your contributed revenue and your earned revenue. And we're going to see that in part 1. Line 8 is contributed revenue, your contributions and grants, right? We'll use our current year information. Line 9 is your earned revenue, because remember, DCEO is seeing that as our program revenue. So those 3 buckets will be looked at: total revenue, contributions and grants, and program service revenue. Now, a little tricky thing with 990, our business activity codes are in a different section of the form. So I'm down here now in part 8, which is the statement of revenue. And those of you that are familiar with this form, that review or complete this form, you will recall that you actually need to list a business activity code for each type of revenue. If some of you have different activity codes going on there, often your work will fall under the same business activity code. If you have different codes, reach out to the help desk. Let us help you figure out what we need to put for that business activity code as well. And I want to actually take this moment to say, it's not going to affect your eligibility, okay? These business activity codes are really more an opportunity for DCEO to just put applications in categories to help them manage their review process. So if we're not clear on the business activity code, if maybe we have it wrong, it's okay. I don't want anybody to stress out about it, because it's not really an indicator of eligibility. Again, you can go back and watch a webinar of eligibility. You can reach out to Arts Alliance Illinois if you have eligibility questions. You do have to provide a work sample, which we're not going to go into in this webinar, but reach out if you have questions around it. And then finally, we have the EZ. Right? If you are filing the EZ, you're going to submit this form. And we see here, we're going to use L, line L, for our total revenue on that form 990 EZ. Again, I just really want to be clear that we're looking at declines. I'm sorry, I should say DCEO is looking at declines in revenue, not profit or loss. So here's just an example. I have taken someone's 2019 information filing, right? And we see here that gross receipts in 2019 were about 140 million, right, for this organization. And then in 2020, gross receipts were 124 million. So that is a decline in revenue. That's what we're looking at. We're not looking at profit and loss. And this is another great example of how you're going to use your fiscal year end to determine the appropriate year. So we see here that this is the 2018 tax form, but this organization had a tax period that ended June 30, 2019. So this is the form you're going to submit for that 2019 year. So with that, before we go to some scenarios, pardon me, I'm actually going to change right now, and certainly give a yell if we can't see my screen anymore, but I actually want to take you through a little bit of the application. So here I'm on the B2B application. We see right up at the top, we're going to enter our business legal name and some other information. Here, number 3 is really important in terms of how we answer and what forms we need to submit. This application is dynamic. It is going to change a bit depending on the selections that you make. So notice I have selected here that I am a nonprofit organization. If I change my selection to sole proprietorship, some information down here that I need to submit changes. So this is pretty important. I'm going to stay on sole proprietorship for a moment, and I'm going to scroll down. We have to enter some other information. Some of it is optional. We're going to put in our address, right? Now, here, number 8, we get to select our NAICS code. That's that business activity code that I was pointing out in each of the forms. This is dynamic as well. This is a 6-digit code, and you're going to select your first 2 digits from the initial dropdown. Here you see I've selected 71, which is the arts, entertainment, and recreation category. Because I've selected 71, I get a dependent drop-down menu down here that allows me to choose from all of the codes that are available to me under 71. Notice that if I change, right, to something else, 22, then I have codes that begin with that number. If you don't know your code, we can help you find it. And again, this is not determining eligibility. This is really just around a review categorization. But here's where you're going to enter this information. I will say theater companies and dinner theaters here, right? And then you can choose the category that best describes you. When we get a little bit later into the form, pardon the scrolling, everybody, we see here, now remember, I have selected sole proprietor up at the top. It's asking me now to enter my gross receipts for each applicable year. That's where we're going to go back to that line 1A or line G or line L, depending on the tax form that you're using, what you're going to put in there, right? Your gross receipts. You also have an opportunity then, right? It tells you here, what are the forms that you are submitting and that you need to upload? You will select, I've selected sole proprietor. So here, I'm going to go ahead and select IRS Form 1040, including Schedule C, and we can upload. You do this for each year. So here's an opportunity to select for 2019, 2020, and 2021. Importantly, there is also an opportunity, I think down at the bottom, sorry for the scrolling, everybody, to submit a note, or maybe my friends at Arts Alliance, Casey and Sasha, can help me out to see where our documentation notes are that we can submit, because I'm not finding it. Yeah, thanks, Casey.
So yeah, I mean, this is, get ready, y'all. So they're actually saying to upload a note. So if you go up to where you upload the tax forms, you can upload multiple documents. You can upload up to 15 files. So the recommendation is that you actually add like a PDF note that you've written as one of your files for this upload. The other thing that you can do, if you know how to combine a PDF, is you can actually add that as a PDF note to your tax filing to make sure that those things stay together. It's not totally necessary, but yeah, it's just adding notes into this file. And it is unfortunate that it doesn't say that on the application, but we do have this guidance directly from DCEO that this is what they are recommending for folks who have situations that they want to explain or any additional information they want to add.
Thanks so much, Casey. And we're going to talk about a couple scenarios that have come up where that might be relevant. So I just wanted to point this out because they're depending on your situation, you may have some splaining that you want to do. You may have some more information that you want to include, and you're going to do that here with your tax forms. And we'll get back to that in a moment. So that is just a quick walkthrough for sole proprietors. I'm going to show you how this form changes a bit when we make some different selections. So again, I'm apologizing for the scrolling here, but notice if I choose LLC, right, it's going to ask for a different types of first tax identification number. We get back down to the tax forms here, similar. It's going to ask me for my gross revenue for each of these 3 years, for your gross receipts. It's going to ask which form you are including. So I think I selected a corporation, right? So if I select corporation, I now get an opportunity, just like before, to include information for 2019, 2020, and 2021. Let's say you're a nonprofit. And we select nonprofit up here, right? Similar information, we're entering our tax identification number, some other address information, our NAICS code or our business activity code. Now, here we have a new question because we said nonprofit. Do the gross receipts for your organization total $50,000 or less? If your gross receipts total $50,000 or less, you are probably using that 990N, that postcard. Not necessarily, but chances are great that you're using that 990N. So if you select yes, you still need to put your gross receipts for each year, right? But then notice, we don't have the opportunity to select the tax forms that we want to submit anymore because the postcard itself doesn't actually have any financial data on it. So they're not asking for it. If you are a nonprofit with gross receipts of $50,000 or less per year and you're using that 990N tax postcard for your filing, you are eligible for this grant award. It will be limited to the base amount of $5,000. If we select, I'm sorry, we're still a nonprofit. If we select that we had greater gross receipts, right? Do the gross receipts for your organization total $50,000 or less? No, I had more gross receipts than that. Now notice that the application allows you to enter for 2019, your gross receipts, your program service revenue, and your contribution and grant revenue. You get to enter all of that for each year, 2019, 2020, and 2021. Because again, for nonprofits, DCEO will be looking at these separate buckets and seeing which decline in revenue may be greater. I believe, certainly Casey and Sasha, let me know if you disagree, that I've gone through the examples right now where there's the most dynamic change. If you select any other type of entity, I think we will see some repeat. You're going to have an opportunity to select, of course, or upload your tax forms for 2019, 2020, and 2021. And in each instance, you are going to be asked to write in what your gross receipts were. So with that, I'm going to go back to the slideshow here and just talk to you all a little bit about some complexity, I think, that has come up. So some questions we've gotten so far. Will my unemployment benefits, maybe you're a sole proprietor and you got unemployment during COVID because of pandemic allowances that provided for that. Will my unemployment benefits show up in my gross receipts? As far as I understand, no, they won't. Unemployment income is not reported in gross receipts on Schedule C. So if you received unemployment, you are still only showing your business gross receipts in showing those Schedule Cs here. That unemployment is not going to inflate your revenue, so to speak. What if you received maybe SVOG, that Shuttered Venues Operating Grant funding, or the Paycheck Protection Program? You got loan forgiveness. Absolutely, you should still apply. This does not make you ineligible. For nonprofits, SVOG money or forgiven PPP loans most likely showing up in your contributed revenue, right? That forgiveness of debt shows up as revenue for us, and we're booking it as contributed revenue. But I want you to remember that DCEO is going to be looking at contributed revenue or earned revenue or total revenue. So that SVOG or PPP money may impact one of those revenue line items, but they're also looking for which bucket of revenue that they're comparing has the greatest decline, and they're going to take that one, okay? For profits, SVOG funds and PPP loan forgiveness, again, as far as I understand, is not to be counted as taxable income. So it will not be showing up in your gross receipts or sales, and therefore not impacting a decline of revenue that DCEO will be examining. Another thing that's come up is, hey, what if my business or tax structure changed in some way in the 3 years that are being examined. So a great example came up. We had a couple who had been filing their taxes individually for 2019 and 2020, sole proprietors. They both have their own businesses. And then they got married and they filed jointly in 2021. So how do we do that? This is a really great opportunity to include a note, upload a note, or some kind of explanation that we were referring to earlier to explain what happened. So these two individuals are still applying separately, individually for this grant because they're still two separate businesses. Each of them are including their joint tax return for 2021, and then their individual tax returns for 2020 and 2019. And they're including a note that says, hey, DCEO, I got married in 2021. So only look at Schedule Cs for Jillian in 2021. You know, don't look at my husband's Schedule Cs. And then in 2019 and 2020, you will still only have my Schedule Cs to compare to. So these are just a couple of examples that have come up that kind of touch a little bit, aren't as straightforward as the application. And I think, let's see what I did. I've already taken you through the application walkthrough. So with that, certainly want to understand if there are any questions that are coming up that we haven't been able to answer in the chat. And if anybody wants to see anything again in the application or the forms.
I think it would be great if you went to the next slide, just so folks can see the help desk info here. Also, we're dropping it into the chat, that link, but this is the, if you have kind of specific questions you want to ask that you don't get answered here, you can drop those into, go to the help desk and submit a ticket through our help desk, and you'll get one-on-one support through that. And we really highly recommend that you do that to make sure that you're in our system, so we're getting you the answers that you need. Sasha, I'm thinking it might be worth, we've been answering a lot of these questions that are coming in over the Q&A, but I think it would be worth going through a couple of them, just so that we can say them out loud for folks who may not see them in the Q&A. What do you think of that?
Yeah, definitely. Hi, everyone. I'm Sasha Amtenko, Help Desk and Technical Assistance Manager for the B2B Arts grant. Thanks for your questions in the chat. I've been doing my best to keep up with some of these great questions. I will just go through them for anyone that hasn't been able to view them in the chat, because you've been so attentively listening to Jillian. Now we can draw your attention to questions. So we have a question regarding, I'm going to skip down to a venue in Chicago that's an Illinois-based company, but the company that operates the venue is registered in Illinois. And for tax purposes, this company is a disregarded entity, but all revenues are reported on a real tax return registered in Delaware. Sounds like a bit more complex of an issue, so I would ask this person to still submit your question to the help desk, because I would like to look into this a bit further with the disregarded entity piece. But just for folks to know, to be eligible as a business for this grant, you must be registered and operating in the state of Illinois. So if you're a sole proprietor, if you're a nonprofit, so that's going to be just a given. In the event that you have, you're part of an entity that's actually registered elsewhere, but you have programming or there is sort of tax statements and filings that are happening here for the state of Illinois, I think you should still come to the help desk, because we'll want to sort through that. I wouldn't want someone not to apply just because they know that their parent company is registered in another state, but you actually do have tax filings here in the state of Illinois. I know that's been something that's come up in a few questions on the help desk, so please email us there.
And just to add to that, because this is just the accounting webinar, we are working with the lawyers for the creative arts, and this is definitely, for some of these kind of incorporation questions, I think they'll be really helpful. So just to reiterate, go to the help desk for sure.
Yeah, definitely. Next question, how would a sole proprietor or individual artist be eligible if they're not an organization? These 2 points seem to contradict each other. That is a very common misconception. so many of us, including myself, don't think of myself as an organization. I'm a person and I'm a sole proprietor, but that language is confusing. Sole proprietors definitely have potential eligibility to apply to this grant. As a sole proprietor, if you are doing business activities that fall under the categories that are eligible for the B2B Arts grant, and you're getting income, you're getting 1099 income, that is that we would want to still encourage you to apply. But if you need some help and support in understanding your full eligibility, please come to the help desk. Do not self-select out just because you're an independent artist or sole proprietor and you think you're not an organization. That language is confusing. You very well may be eligible.
Sole proprietors are eligible. We hate this language. We apologize for it. We didn't come up with it. It is definitely getting in the way of some of our outreach efforts on this. So please, 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 if you are a sole proprietor, if you consider yourself a freelancer, if you have friends that are sole proprietors or consider themselves freelancers or independent contractors, they may be eligible. Please let them know about this program and let them know about the help desk so they can get support.
Yep. I am an independent live venue operator, yet my tax code begins with 9.2 rather than 9.1, which is restaurant versus theater. I qualified for the SV, the Shuttered Venue Operator Grant with this tax code. Am I still eligible for this grant? I qualify in every other factor. So big overarching message here with these NAICS codes, with these business codes that Jillian so kindly went through on each of the tax forms so you can locate that on your previous tax forms if you need an idea of what codes you were ever used for your business in your tax filings. For some of you, it might be the first time you've even have awareness of these codes. Know that those codes are not being solely used to determine your eligibility. It's one factor, and we would actually at Arts Alliance say that it's not, the NAICS codes are what we have understood. They're going to be used more for organizational back-end purposes than for actual eligibility. So if you're stressing about choosing the wrong code, please do not stress. Choose the code that best matches what your business activities are as it relates and pertains to this grant. And know that if you need support in that, we can help you at the help desk to find the proper code that makes sense. And then when you input that on your application, know that if it doesn't match up your tax forms, or if it didn't match what you put on the SVOG grant, that doesn't mean it's going to knock you out of eligibility. Far from it. We know now that it's really being used by DCEO to help organize applications on the back end, but it does help also inform DCEO to get an idea of what your business does. And what category it could fall into. So again, with NAICS codes, just do your best to select the code closest to what your business does. Do not stress if you think it doesn't match up previous applications, or if you're unsure that you're choosing quote unquote the right or wrong one. That is not going to be the sole factor for eligibility. We have also your work sample, and of course your tax forms, and really ascertaining if you have experienced a $5,000 decline in revenue between the years of question here.
I can jump in with another one here. Sasha, why don't we go back and forth? That way one of us can be looking while the other's talking. Joey, will having previously received a big grant affect eligibility for this grant? I see it's a question on the application. It only affects which year they're looking at. So DCEO has said that if you received BIG or B2B, that they will only look at 2021 versus 2019. They won't look at 2020 versus 2019. So you'll only be able to use your the decline in revenue that you experienced in 2021 to show losses. So it doesn't make you ineligible, but it does affect what they're looking at for your eligibility.
Mm-hmm. Next up, from Leslie, I'm hoping for information on how to provide data for university-based performing arts center, the University 990, is useless and grossly misleading in this process. So for most universities, right, it's the parent organization, the private university would not be eligible itself to apply for this grant. It's not, unless it's a dedicated arts university, I would argue. But otherwise, most universities in and of itself wouldn't, but they have many programs that are their own either 501c nonprofit or they're an entity of the university. And in terms of the taxes, you would roll up, your revenues roll up to the full 990 for the university. So if you are a performing arts center underneath the university umbrella, you would not have to submit the full 990 for your university. You would just need, and there's literally a question on the application when Jillian was going through, where you would select, I'm a fiscally sponsored entity, and I'm going to submit a profit and loss statement. And that is what, in terms of the documentation you would need to provide, you only need to provide those financial statements and that reflect the activities of the Performing Arts Center on that. And according to the FAQs from DCEO, they'll just want to see that those statements are audited or approved by a board or senior leadership member of the parent organization.
Yeah, I'm trying to find that here, Sasha. So I apologize for the scrolling, everybody, so that we can just find that while you're continuing, like those questions about the center within a larger, yeah.
Another question, okay, big grant. So if the gross receipts is gross receipts based on pre-COVID or current total receipts, just to reiterate, when we are talking gross receipts, we're looking at the gross receipts for 2019, for 2020, and for 2021 on your tax forms, depending on what kind of organization you are. So I think, Leslie, you're with a university that has a 990. You're going to be looking at there are specific line items for the 990 for gross receipts. But again, in your case, it's a little bit different since you're a sub-entity and you're going to provide a profit and loss statement. For anyone else that's here and just wondering about gross receipts, that this grant, again, is looking just at a decline in revenue being the gross receipts line for your 2019 form, your gross receipts line for 2020, and seeing if there's a difference of at least $5,000 in loss, in decline. And then the same thing, 2019 gross receipts compared to 2021 gross receipts. And if there is at least a decline in revenue of $5,000. If both comparisons, if 2019 to 2020 and 2019 to 2021, both have at least a $5,000 decline in revenue, DCEO will look at the larger number. They'll take and calculate your award based on the larger decline.
A question here for Jillian. For nonprofits, we're looking at our federal 990, correct? Because we submit a 990 IL to State Attorney General that does have financial information, but not broken down.
That's right. We're looking for the federal forms. So federal 990. Also, just want to thank Janet, who pointed out, as we were looking at what Sasha was just talking about, that question 18 is where we're going to actually say whether we're fiscally sponsored or part of a larger organization. When you click yes, you get an opportunity to submit other documentation that would show the revenue associated with just your center or your project.
Another question, Jillian, if you filed 990N postcard, it doesn't reflect financial info, but orgs who file the 990N can still apply. Oh, sorry, this is Sasha's response. For nonprofits, we're looking at our, where's the 990N question from Soft Cage?
Yeah, I think, Casey, I saw a question that like we actually file the EZ, even though we are eligible to file the N, which is perfectly acceptable. You may be eligible to file that postcard, and for whatever reason, you are still filling out the EZ or maybe the full up 990. I believe that this is a question that we have out to DCEO, because right now you have to actually select, right, if you had gross receipts of under $50,000 or not. And if you select yes, you do not have an opportunity to submit your tax forms showing the easy filing? So I believe this is an open question right now for DCEO to understand how an organization can submit their full up tax filing if they are answering honestly, which is what you asked. Like, we need to be honest here.
Mm-hmm. And there may be, yeah, we'll wait back to hear from DCEO. So if you could submit that question to the help desk, then we can circle back and just confirm if what to do if you actually do have and have completed the full 990 EZ, but want to be honest on the application because you're attesting to and certifying, that your responses in the application are true. So we can help support you in figuring out how to still attach your full 990 EZ if that's what you would prefer to submit, because of the ability to reflect the different revenue items. I totally get that.
Jillian, we've got a couple questions. Sorry. There's a couple questions about the fiscal year, calendar year. Jillian, could you just go over that one more time?
Yeah, you're going to use your fiscal year end to determine which years you're filing, right? So I think I saw someone in there saying they had a July 31 fiscal year end. So you're going to take your 990 that is relative to July 31, 2019, right? So that means some of that year occurred in 2018. But we are not asking you, or rather DCEO is not asking you to unpack your financials of your fiscal year and give them information just relative to calendar year 2019, if that makes sense to everybody. So if you have a December 31, 2019 year end, that's what you're including. December 31, your Form 990s for 12/31/19, 12/31/20, and 12/31/21. If you're a June 30 or anything other than a December 31, you're using the year that your fiscal year ended. So July 31, 2019, that's the tax form that you're going to submit. Hopefully that's clear.
And for most people, just to be super clear, like there's only one, right? Like IRS tax year. It's just, and the forms are the same. It's just what years you're on as an organization in terms of your fiscal versus calendar year. So I know it's confusing, but if your fiscal year ends June 30th, 2019, that corresponds with the 2018 IRS tax form, like that tax year. So I know folks are wondering like, oh, if we ended, our fiscal year ends in 2019, June 30th, 2019, am I using 2018 or the 2019? It's really you want to use your tax forms where your tax year is that reflects the end of your fiscal year on June 30th, 2019, which often corresponds with the year before tax form.
Here's a visual of that. So here you see this organization, their tax year is July 1 through 6/30. We see here it's ending 2020. I know that's small, everybody. But we're using IRS form 2019 because that's just the way it works. You want to go by your tax year, right? So this would be your 2020 tax form because your year ends in 2020. Certainly reach out to the help desk before you hit submit on this grant application if you are unsure if you have included the right years.
There's a question here that I think is kind of interesting. Joey's asking, will there be an audit process at the end of all of this, like with the shuttered venue operator grant? I believe the answer is no. What we have been told by DCO is there's not any reporting requirements. So I think that Jillian, Kamari,
that's what I understand as well, that there's no reporting requirements.
Yeah. So, I mean, if you want to do your own audit, certainly go wild, feel free. But as a DCO is not saying they're requiring it.
Also, as we understand it, if you are deemed eligible and you get this award, it's general operating dollars. And this is not, for any of you that are nonprofits, this is not restricted revenue that you need to use for a particular purpose. It's for you to use in whatever way you need and want.
I saw some questions about there's a question about receiving COVID-19 checks and how that might show up or impact your revenue. My understanding, and feel free to throw this in the Q&A box to confirm, but if COVID-19 checks means unemployment, like the emergency unemployment checks of sort, that will not show up on your Schedule C revenue.
Kamari,
And
you wanna
Kamari, if
hop
you want
in
to
on
jump
that?
in.
Yeah, to my understanding, there were 3 stimulus checks that were released. I'm assuming that's what the question is regarding. And again, that's not included in revenue for the Schedule C purposes.
Also, I can't remember if this was said, but it has come up a bunch. Sorry about this, y'all, but you are having to attach your full tax returns, not just the Schedule C to the application. Jillian,
Correct.
you might have said this when you walked through it, but just to say that again, because we get that question a bunch.
Okay, I see a lot of these fiscal year questions here. I'm just going to address one more. 2021 tax forms not needed for fiscal year. Oh, it just
22.
So yeah, my chat box just flew up. Okay, 2021 tax forms not needed for 2022. Correct. And the fiscal year ending May 31st, 2022, that's not going to be, you do not want to send that form because we need to look at, DCEO is going to look at the tax form ending May 31st, 2021. So that gross receipts, that would be the to reflect your 2021 revenue. If you're on a fiscal year, you want to submit your tax forms ending May 31st, 2021 for whoever put that question in the chat.
Can I add to that, Sasha? Because you're right, there's a lot of questions here. Someone is also saying, hey, for SVOG, for that grant application, we actually did have to unpack our fiscal year and put, give P&L statements that were really just relevant to that calendar year. Wouldn't it be better to use that SVOG calendar year data rather than the fiscal year data? In this instance, nope. Because what we're being told by DCEO to submit is our tax returns, right? So that's what they are ready to review. They've got a system that they're reviewing line items. So if you go ahead and unpack that and give them P&Ls and not the tax data that they're asking for, you could be deemed ineligible, and we don't want that. So let's just submit the tax forms that are being requested.
I agree. I can see like the desire to here's everything in hopes of being able to unpack and be able to maybe draw a line as to where you have a decline in revenue, but that may actually complicate things for your application. So sorry, I'm just looking at the fiscal year questions again. If your tax year is July 1st, 2018 to June 30th, 2019, the tax forms you would submit by IRS tax form 2018.
Yes.
Yeah, that's correct.
Which is your 2019 tax form, exactly. Because you want to think about your fiscal year end is what you want to go with.
Mm-hmm. Yes. I have the magic question. When will DCEO be issuing checks? Don't we all want to know? All we do know is that applications will not be reviewed and notifications for eligibility will not go out until after the portal closes on May 10th. And then subsequent to that, they'll be determining awards. And
they are trying to do it as quickly as possible. I will say that on the back end, some of the timelines that they're saying to us, it would be very, very short. So they would be getting out checks very, very quickly, like early in the summer. I think, we're not DCEO, we're Arts Alliance. So we can say to y'all, will they get those out in early summer? We hope so, but this is a really complicated program. It's a one-off program. It's novel. So there could be issues that crop up when they're looking through eligibility and doing their review that end up taking longer. There's also going to be an appeals process, and we don't know how long that appeals process will take. So some of that will also depend on that, especially if we really do our job well and get the word out. And a lot of folks apply for this, which we hope happens, because we want to use every single dollar of the 50 million that is available. We don't want to leave any money on the table. So please, please, please spread the word. Tell your friends. Everyone who's eligible will get money. This is not competitive. So please, 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 please reach out to everyone that you know who may be eligible and tell them about this. This is the moment. Now is the moment, especially for independent contractors, freelancers, folks that fall into that sole proprietor category, folks that are single member LLCs. Sometimes their taxes are messy. They may have been crying in a closet through all of 2020 and not have put in their taxes in 2020. We understand it happens, but especially for those folks, it's really important that they hear about this right now so they can go ahead and file those taxes or file an amendment if they need to and still get an application in by May 10th. So a lot of us were crying in a closet through most of 2020, by the way. So I, absolutely no judgment. Yeah. But that's what we know. They're trying to get the checks out June, July, but there's some factors that we just don't know how they're going to play out.
All right. We're at 11:02. I know we started a few minutes late, so we're giving that time back for all of these important questions. But I think we covered most of at least what was in the Q&A. And then please visit the help desk with any of your individualized questions. And we will, I know there was a request, like, is there a number that I can call at the help desk? Well, we are doing, the help desk is purely written correspondence because we want you to have information written for reference too, in the event that you might need to refer to it later or an appeals process or anything like that. However, we are doing you one better where we'll set up a Zoom session, 30-minute sessions if you need support to walk through your application, check something out. On the help desk, you can attach your tax forms for pre-review just so we can take a look. We have Jillian, who's able to support applicants with any tax-related questions. There's myself and a team of 4 to be able to walk through your application with you if that is something that is helpful. So please visit the help desk. And thank you for your patience to those who've submitted questions and have been waiting on responses. Our approach is thorough. We want to be thorough. We want to get you all the answers you need, and we want it to be accurate. So if you are waiting on a response from us, it's not because we're ignoring you. It's because we really want to get you the info that you need, and it might take us several days to get that.
Especially because we're in communication with DCEO, just to say that, like some of these conversations end up being back and forth between us and the DCEO staff. So.
Yeah. But thank you.
I saw the webinar recording answer. It will be on the website. We'll also email it out to everybody who registered for this webinar. So you'll either get it in your inbox or you can find it on this artsalliance.org/creative recovery webpage. All right.
Just a few other quick questions. Toolkit, Deborah, I'm not sure what toolkit you might be referring to. Does that ring a bell, Casey? Unless it was a outreach toolkit, but
there is an outreach toolkit and we love it, and it is in these slides. We'll also send out these slides to all of you to have, and the last slide actually has a link to the toolkit. Woo! Don't rush. Ask for help. Wait for answers. Spread the word. So there's a link there to the outreach toolkit. So if you want to be sharing this out with your network, sharing this on social media, we would absolutely love for you to do this. And this will also be in the email that you get as a follow-up to this webinar.
Yeah.
Cool. All right. Well, thank you so much, Jillian. Thank you so much, Kamari. Donna holding it down over there, our interpreter. Thank you, Donna. And we hope that y'all will all put in a successful application. We will be raising a glass on May 11th. And hopefully have a lot of checks going out this summer and get money in your pockets. So thank you all so much.